A fictional gift card is activated with $75. That number is the starting stored value for this classroom example, not a promise that every later receipt will still show $75. The card is a payment container whose balance changes when value is used. The first purchase is a set of art supplies priced at $28. When the card pays that amount, the arithmetic is $75 minus $28. The purchase consumes part of the stored value, it does not change the original face value printed on the card. After the first transaction, $47 remains. This is the current usable balance under the fictional assumptions, because $75 minus $28 equals $47. The remaining balance is a transaction result, while $75 is still the historical activation amount. A second fictional purchase costs $52. Comparing $47 with $52 reveals a $5 gap. The card does not suddenly regain its printed face value at checkout, so the second price exceeds the amount currently stored on it. For this example, the merchant allows split tender. The register applies the full $47 gift card balance and combines it with $5 from another payment method. Those two sources total $52 and settle the second purchase without pretending the gift card held more. The transaction path now has distinct records: $75 at activation, $28 used first, $47 remaining, and $5 supplied separately at the next checkout. Each number answers a different question, so none can substitute for another merely because all appear near the same card. Real stored value products can have fees, expiry rules, geographic restrictions, merchant limits, or exclusions. The magnifier in this lesson visibly scans three labels: fees, expiry, and where usable. It identifies terms to inspect without claiming which rules apply. The scope ticket fixes the assumptions. The card and purchases are fictional, no fee is included in the calculation, split tender is allowed, and real terms may differ. These boundaries keep a clean arithmetic example from becoming a claim about every gift card. Return to the activated card. Its face value records $75 at the start, but the live balance changes after use. Looking only at the printed amount would ignore the $28 transaction and overstate what the card can contribute to a later purchase. The balance ring makes that distinction visible. It carries $47 of the original $75 after the first purchase. The ring is not showing a discount, a refund, or new income, it is showing the unused portion of one stored value balance. The cut bar exposes the full subtraction rather than jumping straight to the remainder. $28 belongs to the completed art supply purchase, and $47 stays available. Together those two parts reconcile to the original $75 without creating or losing value. The comparison scale asks a different question. It places the $47 remaining balance against the $52 second purchase. The $5 difference is not a fee and not a new gift card balance, it is simply the uncovered part of the checkout price. At the register, split tender keeps both payment sources visible. $47 comes from the gift card, while $5 comes from the other fictional method. The payment total reaches $52, and the gift card contribution never exceeds its recorded remaining balance. The term's magnifier names fees, expiry, and where usable. Its lens scans those labels in order without displaying a fee amount, deadline, or merchant rule. The visual supports a narrow claim: these are product terms to inspect in a real case. The zigzag transaction path preserves order without turning every state into the same event. Activation happens first, the $28 purchase reduces value, $47 remains, and the later split pay node adds $5 as its own record. Sequence is part of the evidence. The scope ticket prevents a narrow example from sounding universal. Some merchants may not allow split tender, and different stored value products can carry different conditions. Here, the rule is explicitly granted only so the two payment sources can be reconciled in one transparent checkout. The remaining balance ring returns before the second checkout and still shows $47. It represents the card contribution available at that moment, while the second purchase remains $52. The additional $5 belongs to the other payment source and never enters the gift card. The final register view contains the lesson in one equation. $47 from stored value plus $5 from another method equals a $52 purchase. Face value, remaining balance, price, and outside payment are related records, not interchangeable labels. Educational only, not financial advice.